Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, the regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site is Bobby Ang, Senior Vice President and Head of Institutional ETF Distribution at Franklin Templeton, Canada, and my colleague, Kevin Paul Utarid, Vice President of Sales at Nasdaq Canada. We're here to discuss the Canadian ETF market, retail and institutional usage of ETFs, and of course we'll get into liquidity, execution, and trading. Gentlemen, it is great to have you with us. Welcome to Times Square, New York City, out of Toronto. Great to have you both with us.
Thank you.
Kevin, let's kick it off with you. Give us an overview of the Canadian ETF market. What's its size? How many issuers? What types of products?
Well, here's the thing. That market is just exploding. It's been exploding for about a couple of years now. We've seen it just grow. ETF trading, I'd say, in Q1 of 2023 represented about 14.75% of all equity trading in Canada, which is a significant number. That number, if you fast forward it 3 quarters to Q1 2024, that number's jumped to 17.6%. And that's a significant amount, considering ADV in Canada every day is about 600 million shares. So you're talking about 10 to 12 million of that is all ETF trading. You have, specific to Nasdaq Canada, we have 3 pools of liquidity that institutional retail investors can trade of: dark pool, an inverted venue, and a maker-taker book. We represent 25% of all continuous trading on ETFs in Canada. When you factor in block trading, like large size trading, we're 35%. And when you look at just block trading alone on ETFs in Canada, Nasdaq represents about 50% of that. Yeah. So it's an impressive segment in our marketplace that keeps on growing.
Yeah, it certainly is impressive, that volume that you're talking about there. So, Bobby, when we think about flows, asset classes, and what the future of that looks like, where are you seeing capital being allocated to?
Okay. Well, let me just take a step back here and talk about the global ETF marketplace, if I can. So if you look at the global ETF space that started 30 some odd years ago, we're now sitting at about $13 trillion worth of assets. This year alone, in 2024, we've seen $600 billion of new flows going into ETFs. So that's an increase of 10% since the beginning of the year. What's more interesting and more impressive is the fact that we've seen 5 years of continuous growth and flows going into exchange traded funds. So that's 60 months, continuous months of flows going in and not going out into exchange traded funds. Super impressive. If you look at Canada itself, Canada obviously a smaller market relative to the global market at large, but we're looking at about $430 or so billion worth of assets. There's 40 different issuers. That's gone up since there were 2 back in 20 some odd years ago. We're seeing about 1,400 different exchange traded products listed in the marketplace, and year to date we're seeing $25 billion of flows going into ETFs. So super impressive. We're seeing growth come in month over month, year over year, and we're in my opinion just at the tipping point. We're still going to see some growth going forward.
And to add on to that, we've seen the same level of growth in terms of institutional retail usage of the product. So ETFs, we've seen it turn into a real wealth creation product for the wealth advisors and the brokers out there. And that's just morphed into these numbers that Bobby's saying. It's these inflows just keep on coming in. You're seeing a lot of new sectors being covered in ETFs that you never saw before, like AI now is a huge thing, and you have derivatives of those ETFs coming out. You have inverse of those ETFs coming out. So it's a marketplace that we're seeing now. Retail desks were using it, now institutional starting to use it, and they're all different use cases for that product.
Mm-hmm. Well, it's interesting because you had mentioned that you're starting to see derivative overlays within the products as well, which of course, Bobby, as we know, is a great risk management tool as well. Would you attribute that growth, and Kevin had alluded this to the innovation that you're seeing behind the products, whether it's thematic or factor or
Yeah, I think Canada is at the forefront of innovation when it comes to exchange traded funds. First and foremost, in Canada, the first exchange traded fund that was launched in the world was actually in Canada. Some of my U.S. counterparts, they think it's a U.S. product that was launched back in 1993, but it was actually 1990 when the first ETF was launched in the marketplace. And again, that was in Canada. For those who can recall, it was back when the TIPS and HIPS were merged together, which is now the largest ETF in Canada. So you fast forward 20 or some odd years now, and Canada, again, not only launching the first ETF Canada, but they also launched many other firsts as well. So the first fixed income ETF was launched in Canada, the first currency hedge ETF was launched in Canada, the first marijuana ETF was launched in Canada, as well as the first Bitcoin was launched in Canada.
I was just about to mention that
Bitcoin and Ether, they have the
Ether
spot
as well,
ETF.
Yeah, so it's pretty progressive in terms of the creation of the issuers, and you see a lot of new issuers coming up in Canada. There's lots of trade shows, they're always out and about. showing off the new product.
Well, let's talk about the comparisons in contrast to the U.S. ETF market. Do you see, is it because of different regulation regimes that you're able to come to market quicker with certain types of ETFs?
I think Bobby would be better to handle that one.
Yeah, absolutely. I mean, the Canadian marketplace is substantially smaller than the U.S., but it's a little bit more of a lax regulatory environment. Therefore, it's a good opportunity for innovation to come through. So that's a large part of the reasons why in Canada we'd be able to come into the marketplace quicker on all those first. So that's important.
And our relationship with partners like Bobby keep us in tune with what's happening in that industry. So as an exchange operator, we have to make sure that we're catering to this asset class now, that we may be pricing it differently. We may do some programs around it to make it a better execution experience for just about everyone now trading that product.
Yeah, and we'll get to that in just a moment here, but how do Canadians invest? Do you see home country bias, or are there other regions or types of themes that they're attracted to?
Yeah, I think Canada is probably one of the markets that has the biggest home country bias, right? So Canada being 3 to 4% of the global marketplace, but typical Canadian investors will have 40, 50, 60, maybe even 100% of their portfolio solely invested in Canadian equities.
Yeah.
So that's a disproportionate weighting, right? But that shift is shifting away, right? We're seeing a big growth towards international markets, in particular into developed and also emerging markets.
100%.
Not only for diversification benefits, but also for evaluation. So, international markets are, quite frankly, cheaper than it is here in North American markets, which is fully valued, if not overvalued at this point. So I think we're seeing a lot of growth there, in particular to single countries. We're seeing a lot of growth in investors, retail, and also institutional investors looking at investing in particular markets all around the world. Name it, either China, India, Japan, et cetera, various different markets. And of course, there's ETFs or ultra low-cost ETFs that enable investors to make that call.
Yeah, it's interesting. We're actually hearing the same kind of theme in the U.S. as well, because especially for younger companies that are coming on that are publicly listed, that have good governance and clean balance sheets, and they're starting to show cash flow and proven revenues and so forth in those companies where the valuations are super attractive. We're seeing the same thing here as well. Anything in terms of usage of ETFs, whether it's institutional or retail, that you can discern?
Sure. I mean, if you look at the Canadian marketplace, it's about a third, a third, a third. So a third would be sort of the do-it-yourself investors, just the individuals buying and selling securities by themselves. Then what I call retail wealth, right? So whether it's through an advisor or some type of investment professional. And then third would be professional money manager or institutional flow. That could be pension plans, asset managers, endowments, foundations, et cetera. So it's about a third, a third, a third. In the past, well, actually, let me take a step back here. When ETFs were first launched into the marketplace, they were launched for the institutional investor, right? They were launched to provide the institutional investor an ability to trade an index-related product that's tradable on the marketplace without using derivatives and other types of instruments. Now, you fast forward, 20 some odd years now, and we're seeing institutional investors use ETFs even more so now. Whether that's for liquidity purposes, for cash management,
Hedging.
For hedging, transition management, rebalancing tool, making tactical calls, strategic calls. We're seeing them used for all kinds of different ways and sources. In particular, in the asset management world, that's where I'm seeing a lot of the growth. And if I go back maybe 5 to 10 years ago, I would go to an asset manager and they would literally kick me out of their office. Right? They wanted no interest in ETFs. Now they're using ETFs by the hundreds of millions, if not billions of dollars for a variety of those strategies that I mentioned before.
Well, cost efficiency, right? You have tax efficiency. It's really hard to replicate a number of those programs. And part of that is getting best X as well, right? Trying to replicate those portfolios. So let's talk about that. Tell us about liquidity and volume and execution trends.
Sure. So the execution trends that are happening around ETFs specific in Canada have been really interesting. ETFs, like Bobby's mentioning, it's such an explosion with all these inflows. The notional values of these trades are quite large. So they trade in large size, typically ETFs. And as I mentioned earlier, we are 50% of those blocks. To get to that number, it's consulting with Bobby. It's talking to his execution partners. It's finding the right structure for them to have the best execution experience. So introducing new products, unique order types into our marketplace has helped grow that segment for us. So for example, there's an ATS in the US, PureStream. Fantastic. And it's been doing quite well, and we've introduced that ATS as an order type in our CXD dark pool. And it allows an asset manager or portfolio manager to match up with someone like-minded with the same goals for that trade, to do a percentage of volume based on a future volume on the tape, and they'll get a benchmark execution, They don't signal the market. It's a very discreet way to execute orders. And more in Canada, we're seeing new block venues be introduced, new ways to execute large size orders, order types like pure stream, conditional order types. These are all being used now to handle this asset class.
Yeah, and Bobby, of course, there's a distinction between liquidity and volume.
Yes.
And I think that's key when you think about best
Absolutely. Yeah, absolutely. I mean, that seems to be a misconception in the marketplace that is ongoing, right? So it's important to understand the difference between liquidity and volume. So what volume is basically it's a historical statistic. It's what has been traded in the past. So typically it's a 30-day average daily volume, whereas volume is what can be traded. So what can that ETF actually trade? So there's actually a statistic on Bloomberg, which is implied volume, basically, and it shows you how many shares you can actually trade, which in many cases, in almost all cases, is probably 10, 20 times what the average, the actual volume is for that particular ETF.
Yeah, all right. Appreciate the insight from both of you. Thanks for joining us on Trade Talks.
Thank you.
And thanks for joining me from MarketSite. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.